Hello and welcome back to another video. Today's video, I'm going to be sharing with you my trade review on this high probability GU swing alongside this high probability USD swing. Ultimately taking advantage of, a highly predictable weekly candle. Before I actually get into the video, I'm going to be highlighting two crucial things going into weeks like this where our most significant drivers actually are presenting themselves, such as NFP. Now the first thing is that in weeks like this, just because price action is predictable, on an intraday level, does not mean it's probable to take advantage of. Okay, so just because it's predictable, price can go from A to B. It doesn't mean that it's going to be probable to take advantage of. Okay, we may see from this A to B, lots of sharp, lots of sideways price action, stops being run, and then we're still going to deliver to B, but it's going to be very, very, poor to take advantage of. More times than not, you are going to get stopped out on an intraday level, but price may still actually reach its objective. Meaning, on weeks like this, I look to actually stay away from intraday setups. Now, my second point is it's short, but it's going to be on weeks like this, the market actually dictates the rules. If there's no setup, do not look for a setup to take advantage of. Just because I wouldn't look to take an intraday setup, it doesn't mean I necessarily would take one if a high probability and a predictable intraday setup actually presented itself. You've got to be fluid. Not pay too much emotion to this, and flow with the market's intent. Flow with how market participants are actually choosing to trade price in live time. So enough said on that. Now I'm going to be focusing on how I actually managed to take advantage of. So taking a quick look at our dollar index. You can see we actually managed to sweep our previous yearly low, meaning more likely than not we are going to see some sort of retracement on our higher time frame on the weekly candle. Now, if we're going to be seeing some sort of retracement, where's the most likely probable drawn liquidity where market participants are likely going to price? It's going to be this weekly fair value gap, our strong level of liquidity, where prices, this level of price here in our imbalance is going to act as, a magnet for market participants to actually trade towards. Now, keeping that simple, same thing on GU, very, very similar. Let's drop down the time frames a little bit more. We can see we've actually engineered these highs on our daily level here, just below our previous yearly high. Now, going into the Monday, we can see we made a run for these engineered highs, while also, purging our previous yearly high. Now, aligning this with the dollar index, what does this mean? This means more likely than not, when we actually start to see this displacement and disrespect for our parameters here, and then start to see market participants actually push price lower, this means more likely than not, in the current live time, high of the day is going to be in, and potentially even high of the week. Now, why I actually say potentially high of the week, not definitely, is because it's quite easily that the market could then trade higher, but at the current time it's more probable that market participants are going to make a run for this weekly fair value gap. This high probability drawn liquidity. Yes, we haven't reached it, but more likely than not, going into the next week we are going to reach it, and as soon as the dollar index actually hit this weekly fair value gap, this is where I was looking to get out both of the trades as shown by my exit point. So going into the technicals a little bit more. Notice this run on stops here, our previous yearly high, this significant level, and then we see this displacement, leaving behind this version fair value gap, and then from this point onwards we see market participants choose to push prices lower. Now, as soon as we start to see clear candle closes to the low, this current read on price where I'll be looking to execute my position, as where my stop loss actually is. It invalidates my overall weekly read on price, meaning if we were to make a push higher, we may actually just carry on and continue to push prices higher, and yes, I'd take the loss and then potentially look to get into some sort of continuation to the upside. Okay, so I'm looking to place my stop loss at where invalidates the overall, your weekly candle bias. Focusing as well, on the more specifics of the entry. See, on the look to weighted for Monday to see when the highs were placed, market react. See, participant trading break here in our session liquidity specific to time, and then from this point onwards, we see this run prices lower. We get our 130 retracement back into the leg, and then we do see some sort of chop. However, this is normal swing position when, like mentioned, our most highly significant news drivers present themselves, meaning at this current point here, liquidity is most likely going to be engineered instead of delivered. See, here it can be illustrated by the being engineered. Then this is where we start to get a little bit of movement on Wednesday, when some of our news drivers actually come into play. But it's important to highlight how I'm actually aligned with these news drivers. The data came out and prices were higher. Okay, I've taken one loss. It doesn't matter, I'll either look to pull the week short or, like mentioned, look to get into some sort of continuation to the upside. All about just reacting to the market in live times as a result of market participants chosen trading action in live time. Now, moving on to a little bit of analysis on the dollar index. Okay, let's review how market chose to trade price. Okay, so as a whole, we're looking for that retracement into this fair value gap. Now, when does this become probable? Okay, now just because this was predictable, as mentioned, it does not mean it's probable. Now, it becomes probable when we actually look to start disrespecting our new weekly opening gap, as this level acts as simply just strong support for traders to trade price off. Okay, just in the direction of where we're actually in. So when we actually disrespect this, more likely than not, our inefficiencies price action are going to be traded off. Clear here. So we can drop down the time frames a little bit. It'll become a little bit clearer. Yes, there's lots of chop, but that's why we're in swing position. See, this leg just ultimately being used as a ladder, or inefficiency being used as a ladder. Now, let's review our Euro USD trade. I'm not going to get into it too much. Very similar. You can see we've got a bit more breathing. We actually market executed this as soon as our price came up to a level where risk to reward was favourable, targeting our weekly fair value gap. See, though, I actually did exit the position once our dollar index actually met its objective, but very, very similar. You can see our NFP had engineering liquidity to both sides of the market. Actually, we ran prices higher. I was confident that more likely than not, market participants weren't make a run all the way back up stop loss. So I was happy to actually hold this position and not cut anything short too early, not including within swing trades and any trades. But you can see at this displacement when our news drivers actually come into play, the NFP here, but DXY actually managed to reach its objective before it actually came into play. So overall, great week, a nice few profits, 2 wins. But ultimately, this video I'll just share with you, okay, why it's important to solely take advantage of, both high probability and predictable trades. Okay, if it's going to be a swing trade, look to take advantage of a predictable weekly candle on a high probability week as a whole, with good reads of price, etc., and clear reads of price action. And intraday, okay, you want the session to be predictable with high probability trading conditions post our news drivers coming into play, or just market participants choose to trade price quote unquote clean in that given day. So thank you very much if you did make it this far in this video, and thank you for listening, and I will drop the outlook second part.